Hi everyone, welcome to this quick interview with Simon Clements of Liontrust. Today we're going to be briefly discussing healthcare investments in COVID-19. Simon, can I just let you introduce yourself briefly and then we'll get into what you guys have been up to.
Yeah, hi, thank you. So my name is Simon Clements and I work on the sustainable investment team at Liontrust. I'm the lead fund manager across the global strategies. So that's SF Global Growth, SF Managed Growth, and also co-manager across the multi-asset fund. So that's SF Managed, SF Cautious Managed, and SF Defensive Managed. And I've worked on the team now for 10 years.
Okay, all right, fantastic. Today we're going to be looking at, your healthcare investments. Were you sort of invested in these businesses prior to COVID-19, or was it a decision you made as you saw that maybe a global pandemic might be about to occur?
Yeah, I mean, look, it wasn't about us foreseeing a pandemic at all. I mean, really, the way we think about the world is, and the way we invest our portfolios is really we're trying to invest in what we perceive as the economy of the future, really. So we're trying to think, what's the economy going to look like in 5 to 10 years and beyond? And we basically have a very, very kind of core thesis that we think over time and in the future, the economy will be more efficient. It'll also be more healthier, and it'll be also safer and more resilient. So that's how we kind of set up our portfolios around those three ideas. And we have 20 investment themes. Two of those themes relate to healthcare, and one is innovation in healthcare. We believe that, we need to innovate to meet unmet medical needs, to basically solve medical issues. We think that's really important, and also affordability and accessibility to healthcare, which is about taking things that we've innovations that we've created and giving them to as many people as possible. And that's really where, the success in terms of the companies that we've had have really come around those two themes. So really, it wasn't about us predicting a pandemic. It was about us thinking about the way the economy of the future might look. And what we found with the pandemic is we think that the economy of the future is somehow quite a lot closer. So we've said 5 years worth of change in 5 weeks in many areas of the economy, and we think healthcare and the healthcare companies we invest in are really benefiting from that, and because they're part of a solution that we really need to find from a healthcare perspective.
Okay, fair enough. That makes sense. So if we just look at some of the companies that you guys are invested in, who are sort of actively in the COVID-19 defense, I guess. Are there any of these in particular you want to just kind of highlight and some of the rationale behind?
Yeah, I mean, look, at the heart of this crisis, and this is, the biggest crisis many of us may face in our lifetime, it's a healthcare crisis, and really the economic fallout is secondary. So it really, winning this fight is about finding a solution from a healthcare perspective. So really, the fight really is in three key areas which you listed here. So the first is therapies, and really therapies are, it's something that you give to somebody that's already ill. So this is what you give to people that already have the virus, and obviously, if the virus, people can get very, very sick with the virus, so it's about giving them, something that helps them. And a good example in the portfolio of somebody providing a great therapy is CSL. So CSL is one of the largest blood fractionation companies in the world. So we spoke to them just after the pandemics really started hitting, after the kind of March Q1 earnings. We spoke to them in April, and they spoke to us about work they were doing in Chinese hospitals, where they fractionate blood. They basically take blood, usually from somebody that's donated blood, and they fractionate it. So they take out all the water. Most of blood's water. And what they get is that there's these proteins that get carried around in your body, and they fractionate that. So they could basically create therapies out of these proteins, usually therapies for somebody who, perhaps has an immune deficiency. So these different types of proteins. But what they were doing, they were fractionating the blood of somebody who'd already had COVID-19 and creating a therapy from the antibodies, what they called an immune booster. And what they said is they'd found that really, really useful in patients that were very, very ill, like close to death. You could give them these kind of almost antibody boosters, and it was helping them. We've seen trials like that going on, across Europe and the UK too. So that's a good example of a company with a therapy. The testing is key. We need to understand it, and as we, this is a kind of second area for the battle, if you guess. So testing is key. You need to understand, more and more about who has the disease and who hasn't, and from there we can start understanding more and more about it. And a great example in the portfolio is Thermo Fisher. Thermo Fisher is the largest life science provider in the world. So you think about innovation, the picks and shovels of innovation. Thermo Fisher, the global leader, and we spoke to them in mid-April as well. And they are the global scale player for what I call the PCR tests. And these are the swab tests that tell you if you've had COVID-19 or not. And they are the scale player for the UK. So, you think about Matt Hancock, who said he's 100,000 a day testing targets in April to get done. We spoke to Thermo Fisher, and they were the one providing the kit. So again, you think about efficiency, innovation, and scale. The way you do it is with a company like Thermo Fisher.
Yeah.
So, and the last is a vaccine, and really, I've got a healthcare analyst, and I spend a lot of time on the phone, listening to lots and lots of different calls, and to us, we think that a vaccine is really the only true exit strategy from this. And there's a lot of vaccines in, basically being researched now, more than 80. And we're very, very pleased that our company's at the forefront of this. So again, CSL, I spoke about before, the Australian company. They also are, as well as blood fractionation, they also are one of the 4 global flu. They do the flu jabs, and one of the 80 vaccines research trials going on is at the University of Queensland in Australia. And if that works, then CSL will basically provide all those vaccines, and that's similar to what Oxford Biomedica are doing. They're a key part of the Oxford vaccine trial that's going over here. One of the world leaders. So across the piece, we can see across our portfolio, we're invested in companies which we're very, very pleased at the forefront of this fight, and the success of this fight, in part depends on the companies that we invest in, and we're very, very pleased with that, and we feel confident that we're going to get through this, that we're going to get a vaccine, that we're going to understand more about the disease, because we have such confidence in the companies that we invest in.
Okay, all right, fair enough. That all makes good sense. I think from our side, it's pleasing that a firm that we're working with closely, like Liontrust, is obviously active in these areas. They're going to do a lot for us outside of the economics, which you highlighted at the start. I mean, we've kind of spoken how you didn't necessarily sort of adjust your weightings beforehand. You weren't sort of predicting a pandemic, but I think you touched there on the fact that you've obviously been speaking to people since it's occurred. So presumably you have sort of adjusted the weighting since everything kicked off.
Yeah, I mean, look, we try to take, we really do try to take long-term views when we invest. And we don't change the portfolio a huge amount. Like the turnover of the portfolio is about 20%. Again, we're really thinking 5 to 10 years ahead. One thing that we did get an opportunity to invest in were a couple of companies that we had on the watch list that didn't fit our valuation criteria. We have quite a strict valuation criteria in terms of what we expect the company to return over, the average investment, which is 5 years. And one of those was in innovation in healthcare. So here's an example. So, we invested in a company that does robotic surgery. So global leader in robotic surgery, which is, a fantastic product. Robotic surgery is something that you use, when you have to operate in very tight areas, like things like, anywhere around kind of, the bottom of your stomach. And what often happens with these operations is you get little nicks on different, organs, parts of the body. Large percentage of people that have these operations have to stay in hospital longer, and they're obviously, whereas a robotic surgery cuts these down, massively. So really improves patient outcomes. Also, the hospitals like it because less time for people in bed. So, we picked up that. That had fallen quite a lot because people were very concerned about, elective surgery and how long it takes. we did a lot of research. 40% of their business is actually oncology, which is cancer. You can't really put that off, so you can't put it off too much. So that's an example of how we got into innovation, and took opportunity of the market dropping. But in terms of, we kind of did really keep our positions in the companies that are really in the fight against COVID. But what you found is that if a company on average outperforms by 40% over a 2-month period, then the position you have is 40% larger, if you know what I mean. So, yeah. And that was the magnitude of the returns to some of the companies. So, a 1% position went to 1.4%. So we generally kept those positions. So generally, in terms of the portfolio, they're slightly larger. So the market kind of increased the position for us, but we also used the opportunity to try and find, some great names that we felt, the initial part of the sell-off we felt was an overreaction, and there were plenty of great companies in there that we got an opportunity to invest in.
Okay, fair enough. As obviously an advice firm, all our clients invest via an advisor. So I guess ignoring that for the moment, not that it's not important, but I guess as the world kind of moves on from the initial outbreak, and hopefully we reach a vaccine, and we can sort of return to a new normal. Obviously, we've seen a lot of kind of changes in our economy and the way that we all work and live. Have you got any sort of ideas on what sort of companies you might be investing in that scenario?
Yeah, it's kind of a fascinating time to kind of think kind of blue sky and how's the world going to look, because really you really cut the pandemic into kind of 3 key areas. You have the lockdown, then you have, which we're just about through, we're about to come through, then you have post-lockdown pre-vaccine. Now that's going to take at least a year, hopefully only a year or a year and a bit, and then you have post-vaccine. And one thing that's for sure is the world's not going to be the same. So, but lots of things will recover, but they were, lots of things won't recover to the same kind of level. And again, this thought of 5 years worth of change in 5 weeks, and that's really what we experienced. So some things, we think one thing, and you can never be, when you invest, it's you don't want to punt. You want to kind of see a pattern emerging and understand that pattern, and then you start investing behind it. We don't invest behind patterns that we think might happen, but we're not sure. We kind of be pretty sure that they're happening. So that's and really we want to invest behind patterns that make the world more efficient, healthier, and safer. So in terms of thinking about that, what we're looking for and what the sort of patterns we're going to be looking to emerge. First of all, we think that people's quality of life is going to be more important to them. We think that, your health, your well-being, even things like air quality and things like that, which have improved. And I think people have begun to enjoy that. The fact that you haven't seen your families, we think that there may be a more prioritization for things that improve your quality of life. And we think that's really, really good. And, but, you'll probably eat healthier, you'll exercise a bit more, and maybe you'll be less likely to want to create happiness by through consumerism. So, and that tends to play into what we do. We people are still going to buy clothes, they're still going to buy a new car, but they might be more likely to think about buying an electric car because they understand that it's going to make the environment that doesn't destroy the environment as much. So that's one thing. Quality of life, we think is important. That's something we're going to look for. I think on top of that, it's going to be interesting to understand because as we're doing now, you and I didn't need to come and see you. We can do this over Teams or Zoom or whatever. We think that may change the way that people congregate around cities, right? Because you don't need to come into London every day. Even if you work in London or wherever you work, maybe you only need to come in twice a week or 3 times a week, and that probably means you don't need to live in central London. You can probably live somewhere else, and so that kind of change. So that could change demand for transport. Demand for office space could be interesting. Although office space, people might want more space between them. Potentially, see how we go post-vaccine. So we think that dynamic around the way people work and the way people commute is going to change, and we think that it's going to be less likely to have lots of people in the centre of town, and more likely that people will probably improve their quality of life and live out of town, and probably there'll be a better work-life balance. There'll be more flexibility around working hours because we've learned to do this. You don't miss meetings. You do party day on Zoom, and then when you need to come into town, people do need to still congregate. Like we need to meet up, but maybe we don't need to do it every day. So that's another interesting one. And another one, the one that we're probably got the most conviction that there is going to be changes, just the support for innovation in healthcare. We just don't see how that this won't be supported, because for a long time, like we've always sought out companies that actually solve problems rather than creating Me Too drugs and copying other things to make money and things like that. But the fact that the healthcare industry did that for so long, I think it created somewhat of a mixed reputation. But we think that the reputation of healthcare and innovation and the importance of healthcare in our economy is going to be supported from a research perspective. We think the universities are going to be really supported, and we think that that's going to accelerate, innovation and our ability to kind of come up with solutions to unmet medical needs, and there's still plenty. So, we think that's something really exciting and really interesting, and it's difficult to see how that doesn't kind of accelerate coming out of this.
Okay, fantastic. I think that was really insightful, Simon. So thanks a lot for your time. I should add that you shouldn't view any of the information discussed in this presentation as advice. Whilst everything that Simon said there was very interesting, we always recommend that you go through your financial advisor before making any investment decisions. So Simon, just like to thank you again for your time, and I'm sure we'll speak again soon.
Thank you. Thanks for speaking to me.